We have really big news for the trading and the prop trading world in general. FTMO, the prop trading giant, has just acquired Oanda, one of the biggest names in retail Forex and the CFD world. This merger is shaking things up and could change the trading landscape as we know it, merging FTMO's prop trading expertise with Oanda's decades-long experience in the regulated markets, risk management, and multi-asset trading. In this video, we're going to break down what this all means for the industry, why FTMO did this, what it means for Oanda traders, and the industry as a whole. So let's start with why in the world would FTMO buy Oanda? Great question. Oanda isn't just any broker. They've been around since 1996, pretty much the beginning of retail Forex trading. And they've built a reputation for being one of the most trusted names in trading. With offices in New York, London, Singapore, and Sydney, and licenses in all those places, they give retail traders access to a wide range of asset classes on a platform that's also won multiple awards. Plus, they're one of the few brokers licensed to operate in the US to offer retail Forex, which is no small feat. It requires a lot to get a US license. For FTMO, this is a big deal because it's more than just about expanding their reach. It's a smart way to get ahead of a lot of things that could be coming for the prop trading industry, most important of which could be a regulatory environment that is changing. Regulators all around the world are taking a closer look at prop firms, and they are definitely going to be looking at more, regulations and more rules in the coming months and maybe even year. And these new compliance rules could be coming soon. So by acquiring Oanda, FTMO basically gains access to a team that knows how to navigate a lot of these challenges, regulation, getting licenses. It's like having a seasoned guide in one of the trickiest markets in the world, which is getting those licenses. In fact, there were reports that FTMO had been trying to get an Australian license, and the acquisition of Oanda perhaps is a sign of how difficult that was for them, and maybe it was easier to go ahead and acquire a firm with existing licenses. Now, some traders are wondering if this is actually about managing profitable traders, because we've actually been hearing a lot about how these prop firms may be struggling with risk management and that the models are not working and they could be blowing up because there are more and more traders who are getting smarter and passing their funded accounts and actually getting payouts. And I think this is probably true. One of the biggest challenges for prop firms is handling their top traders who consistently hit their profit targets, and they may not be offsetting them like they should be, and they may still be trading virtual accounts. While this may be a good problem to have, it does increase the firm's risk exposure, especially since I think most of these traders are still trading on virtual simulated accounts. Now, without solid risk management and experience to do so, this can expose the firms to significant financial strains, especially in these types of markets which are so volatile. By bringing in Oanda's risk management experience, infrastructure, and direct market access, FTMO can hedge those risks more effectively. This move will help FTMO sustain profitability and protect its funded trader program, making sure it still exists for everyone who wants to become a funded trader. This is part of what I see to be a larger trend in the industry. Prop firms are maturing, the industry is maturing, and is starting to think more like brokers. They're building better risk systems, refining their models, offering more comprehensive services that are more trader-friendly. At the end of the day, I think it should be a win-win for both prop firms and traders, because as they scale, these firms are refining their business practices to better serve traders, while also reducing their internal risk. FTMO's statement, I think, sums it all up perfectly. They said, "We're delighted to welcome Oanda's existing management team, whose track record in complex, regulated markets, strong expertise in risk management, and customer-centric philosophy fully complements FTMO's own vision and strategy. We look forward to building together a unique, comprehensive trading powerhouse group of companies that has not existed in the market until now." So what does this mean for the prop industry and other prop firms? What can they do? Well, it's simple. Adapt or fall behind. Regulatory pressure is building, and firms that don't prepare for what will eventually be coming